Hi, everyone. Just going to kick off in a few more minutes here. Let me get my thing going. Hey, Rich, can you confirm my audio is working? Just ping me in the chat if you can hear me. I think it's good, but I want to make sure. Rachel, can you confirm my audio is working for me, please? Thank you. Hi, Darlene. Just giving a few more minutes for a few more attendees to join us. We'll get us queued up to go live here. Everyone will just be kicking off in just a minute here. Trying to get our live stream up and running. Okay, once we get this live, we will kick off. Making sure that is working. Awesome. I think we are live. So thank you everyone for taking time out of your busy day to join us for this session. Today's session is going to be on surviving and thriving amid COVID. Specifically, we're going to be talking about the Canadian Emergency Wage Subsidy and its updates for periods 5 through 9 and any applicable changes for periods 1 through 4. So a little bit of housekeeping before we kick off. Let me see if I can move this down to somewhere. A little out of the way. So if you are having trouble with the audio, you can dial in to the Canadian audio channels through your phone. The number up on the screens are the local dialing in numbers for Canada, and the meeting ID is going to be 500-495-921. In addition, I want to point out that everyone has the ability to chat, raise their hand if they have their question, or to post in the Q&A panel. I do encourage everyone to use the Q&A panel as much as possible because it's a little bit easier to manage our questions in there. I will do my best to answer all those questions as we go, or if not, at the end when we're going to have an open Q&A period. To give you a little background on what the agenda is going to be, I'm going to start with a very brief intro into who we are. Then we'll break right into the wage subsidy by looking at how it helps, what the changes are, what the eligible periods are, how much you can qualify for, what the new top-up rate is, what the new safe harbor rule is, and how you calculate your subsidy, and some changes to calculating your baseline pay, which is now important for all employees as well as not just arm's length employees. And then we will close off with how to apply. And very lastly, we'll leave it open for a Q&A session for any questions that you might have. A little background on ourselves. Most of you are probably clients. For the few of you that are not, we are a Canadian accounting firm based here in Toronto, servicing the entire Canadian market through virtual accounting, online accounting, or cloud accounting, whatever you want to refer to it as. We have been recognized as one of the top 50 cloud accountants in North America for 5 years in a row. We are also a member of the National Association of Computer Consulting Businesses, which is a lobby group that works with some of the major staffing agencies across Canada. And that's important because we do specialize in independent contractors and have been doing so since 1984. We are also one of the few ISO 9001 registered accounting firms. That means we have systems and processes. Those systems and processes are constantly improving and evolving, and they are also externally monitored and audited to ensure that we are abiding by those processes. If you have any questions about our services or how we can help, please feel free to reach out and book a free consultation on our website, cpa4it.ca, or contact customer service at cpa4it.ca. One of the other important things I do want to mention for those of you who are not familiar, over the last few months, we have set up a Facebook community to help answer questions around COVID, as well as a specific COVID support email account where you can ask questions of a general nature. And if we can answer them en masse, we will answer those for free. If you do want to have some specific one-on-one issues and need to work with your account manager, that time is still billable. But we do want to provide the help and support that's necessary amid COVID. The group is also helpful for connecting with other independent contractors, and we know that as an independent contractor, networking and building your contacts is important aspect of ensuring you get that next contract. We are also working with a number of staffing agencies to bring more content, as well as investment advisors, lawyers, pardon me, and insurance providers. If you would like to join the Facebook group, you can do so at facebook.com/groups/the Self-Employed Support Network. And we'd love to see you in that community and hope you will reach out and connect with us there. Now, without further ado, I want to reach out and share with you some important links. Most importantly, the one for the Canadian Emergency Wage Subsidy. This is where we've generated most of the content for this session. It is a great source of content. It might be a little bit overwhelming because there's a ton of information there, but if you do have any questions, that's a good place to go and reach out and connect. We will also make this slideshow available after the presentation to anyone who attended or anyone who registered, and it does include a number of useful links within the PowerPoint deck that you can click through to find out more information. So for those of you who are not familiar with the wage subsidy, it is a very useful tool that has been put out by the government to support businesses that have suffered through COVID. And as a Canadian employer who has seen a drop in revenue due to COVID-19, you may be eligible for a subsidy to cover part of your employees' wages, retroactive all the way back to March 15th. It was designed to help people rehire workers, as well as prevent further job losses and sort of ease companies back into the normal operations. So based on the new updates, all employers with any revenue drop year over year or compared to any of their comparing periods, which we'll talk about in a second, will be eligible for some form of subsidy. For periods 1 through 4, you had to have a specific revenue drop, but periods 5 through 9, any revenue drop at all will qualify you for some wage subsidy. And we'll talk specifically about how that works as we go through the sections. So let's talk a little bit about what some of the changes are. First, when we're looking at periods 1 through 4, there's not a ton of changes. You must still meet a minimum of 15% for period 1 or 30% for periods 2 to 4 in a revenue drop to qualify for the subsidy. If you do qualify for one period, you will automatically qualify for the second period. That's called the deeming rule, which means if you had a 15% loss in period 1, and you do not have a 30% loss in period 2, you would still qualify for period 2, but unless you have a 30% loss in period 3, you wouldn't qualify for that. The subsidy rate for periods 1 through 4 is 75% of eligible employees' remuneration, up to a maximum of $847 a week per eligible employee. In order to get that, you'd have to have about $1,130 of employment income to get that maximum. In addition, employees who were unpaid for 14 or more consecutive days in that period can't be included in the calculation for that periods 1 through 4, but you can include them for periods 5 through 9. I don't think that really applies for a lot of our clients, but it's important to note. The other big change for period 1 through 4, in fact, the only real change, is there are now some new options for calculating your pre-crisis pay. And we'll talk some more about this when we get into sort of later in the session and how that's calculated and what those changes are. But prior to that, it had to be from January 1 to March 15th. There are some new options for calculating that pre-crisis pay, which is important because that baseline or pre-crisis pay was sort of set the criteria for how much that you could qualify for as a non-arm's length individual. Now, periods 5 through 9 are where we're seeing the most significant changes, and we'll be going through these in more detail as we go through the session, but I just wanted to go through them at a high level. So first of all, the subsidy rate varies depending upon how much your revenue has actually dropped, and that does change from one period to the next, and we'll be going through specifically how much those amounts are. If your revenue drop was less than 30%, you do still qualify, and you will keep getting the subsidy as employees return to work and your revenue recovers. That's one of the big important changes. Employers who are hardest hit over the 3 month period, over a 3 month period, get a higher amount. We'll be talking about a top-up rate, as well as a safe harbor rule and how that can potentially increase how much you could qualify for. You may be eligible for as much as 85% wage subsidy for those who have been most significantly hit. In addition, employees who were unpaid for 14 or more days can now be included in your calculation, as we talked about. You can use the current period's revenue drop or the previous period's, whichever works in your favor. And for periods 5 and 6, if your revenue dropped at least 30%, your subsidy will be at least 75%, and that's the safe harbor rule, which we'll talk about. And even if your revenue has not dropped for the claim period, you can still qualify if your average revenue over the previous 3 months dropped by more than 50%. And again, we'll talk a little bit more about that when we talk about top-up rates. The maximum base subsidy rate is going to be 60% for claim periods 5 and 6, and it does decrease gradually from 7 to 9. And we will talk specifically about how much those rates are as we get a little further into the session. Now, first of all, I want to talk about what specifically are the eligible periods and what are the required reductions in revenue, as well as the corresponding reference periods that are available. So the first period, periods 1, 2, 3, and 4, hopefully there's no questions about that. That's basically been in place for quite a while now. But period 1 is the shortest period. It's March 15th to April 11th, which is why the required reduction in revenue is only 15%. Again, you can compare March to March for that period. You can also compare March to the average revenue of January and February. This is, again, not new. For the April period, from April 12th to May 9th, you can compare April over April. And again, you can also compare April to the January and February. For period 3, which is May 10th to June 6th, it's going to be May over May of 2019. And again, you can compare to January and February of 2020, the average of January and February of 2020. For period 4, you can compare for period 4, which is June 7th to July 4th. That is the June 20 over June 2019 revenue. I apologize, one second. Sorry about that. Just asked my kids to be a little bit quiet for me. The joys of COVID, working from home and dealing with kids screaming in the background. Anyways, so period 4 is June 7th to July 4th. It's going to be June 2020 over June 2019. And again, comparing to January to February. Again, there's not a lot of changes in these periods. Where we're going to start to see a significant change is when we look at periods 5 through 9. Now, period 5 is the only period that's open for application at this point. That's July 5th to August 1st. The required reduction is anything over 0%. So if you have, a 1% reduction in revenue, you will qualify for something. It would be small, but it would be something. What's really interesting here is there are now a couple of options. So you've got July over July, as well as June over June, as well as July or June over the average of January and February. And you can see that that sort of model seems to continue for all periods 5 through 9. Now, period 6, again, is going to be August 2nd to August 29th, and that can be either August over August or July over July, or August or July over the average of January and February. Period 7, again, is going to be August 30th to September 26th, and it's going to be September over September or August over August, or September or August over the average of January and February. And then lastly, period 7, which is September 27th to October 24th, which at the time of this recording is going to be the last period that is available, although there should be a period 9. I don't know what happened there. I'm sorry about that. So it would be October 25th and on. and we'll follow the same model. One of the other things that's important to know is there are two methods for calculating your revenue, not just differences for different comparison periods, but different comparison methods. There is the cash method, which is literally like how much cash did you receive in those months. And there's the accrual method, which is the typical way that you are doing your bookkeeping. It is the way you're required to file your tax returns, which means that you are accruing or counting revenue that you earned in the period, but may not have received the cash for as of yet. Now, again, I think that's probably pretty straightforward because we have covered that in past sessions. Now, how much can you actually qualify for? This is an important change. Now, as we talked about claim periods 1 through 4, it's going to be a 70% subsidy up to that maximum that we talked about earlier. Now, for periods 5 through 9, it gets a little bit more complicated here. As we said, no matter how much your loss, you're going to get something. If your loss is greater than 50%, it's going to be a 60% of your wages up to a maximum of $1,129. Now that maximum eligible wage per employee is the same for all periods. That $874 maximum benefit per employee is 75% of $1,129, just so you know. So in periods 5 through 9, as we said, it's going to be a percentage of your employee salaries up to a maximum of $1,129. So it could be 60% in period 5, 60% in period 6, 50% in period 7, 40% in period 8, and declining to the smallest amount, which is 20% in period 9. Now, if your revenue loss is less than 50%, you're going to get a percentage of that revenue loss. So it's going to be 20% of your revenue loss, 1.2%, 120% of your revenue loss. So you multiply your revenue loss. Let's say that your revenue loss is 20%. Then you're going to get a wage subsidy of 24% will be the amount of wage subsidy that you can apply up to the maximum of $1,129. That's going to be the same for periods 5 and 6. For period 7, you just get 1 times your revenue loss. So that would be, if you have a 20% revenue loss, you'll have a 20% wage subsidy up to a maximum of a eligible wage of $1,129 per employee. And then it's 80% of your losses in period 8 and 40% of your losses in period 9. So I rambled through that a little awkwardly, but hopefully the chart makes it clear. Again, if you are following along in the PowerPoint slide deck, you can click on these links and they will take you to some examples of how those calculations work. I'm not going to go through each of those calculations right now. So what is the top-up rate? So that is your base emergency wage subsidy that you will get. There is also a top-up rate, and this applies to eligible employers whose revenue has dropped by more than 50% in a particular period of 3 months. So you got to look at a 3-month period, and it's got to have dropped, and it's going to be the 3-month period specific to the claim period that you are applying for. And if your top-up rate is greater than 70%, then you will get an additional 25%. So that's 60% in period 5 and 6, plus a top-up rate of 25% is how you get to the 85%. So if you don't have an average reduction of 70%, you may want to use the safe harbor rule, which we'll talk about in a minute, which is only available for periods 5 and 6. If you are between 50% and 70%, then it's going to be 1.25% times your revenue drop. So you can imagine that if you've got anything less than 50%, you again might be more beneficial to use the safe harbor rule. And if you're below 50% in this average 3-month period, then there is no additional top up. So this is really meant for those people who have really been significantly impacted by COVID-19. So if you've lost your contract completely, this might be more applicable to you. But if you just had a decrease in revenue, the top-up rate may not be as beneficial and useful for you. Now, I want to talk a little bit about the safe harbor rule. The safe harbor rule, basically, I mean, I got a long explanation here, but basically the safe harbor rule works basically like the deeming rule worked in periods 1 through 4. So in periods 1 through 4, if you qualified based on the previous period, then you would qualify for the next period. So basically it's saying the same thing. It says under the safe harbor rule for periods 5 and 6, if an eligible employer that qualifies for the wage subsidy has a revenue reduction of 30% or more, then the employer would be entitled to a wage subsidy not lower than the amount calculated under the rules in place for periods 1 to 4 in respect of an eligible employee who was not on leave. And we did mention how employees on leave can now qualify. That's people who are getting served for part of it. We're going to ignore that again for the moment, just to keep things simple. This means that in the claim period 5 and 6, and an eligible employer with a revenue decline of 30% or more, actual or deemed reduction because of the deeming rules applicable to the period, this gets really complicated, would receive a wage subsidy of at least 75%, which is the safe harbor rule. And then again, if you do have an average reduction of more than 70%, you might actually even be better off and get as much as 85%. So basically this rule is saying that even if you have only a reduction of 30% for periods 5 and 6, you can still potentially get that top up and get that 75% wage subsidy. Now the good news is a lot of these calculations are going to be done for you using the online calculator, which I strongly recommend. So I know it's really complicated and it's overwhelming, and trust me, I'm only going through some of the key aspects of what's listed on the CRA's website, some of the most important areas. And even this can get a little bit confusing. But as you get into the calculator, and we're going to try and show you a walkthrough of that, it gets a little bit more obvious. So calculating your subsidy. You need to determine a whole bunch of figures, and you need to do that before you go ahead and do your online calculation. And what I'm going to recommend is that you use the online calculator. We're going to talk about the different methods, but the online calculator will help you determine the amounts that you need to enter in lines A through G to complete your online form. It will also allow you to preview the amount of subsidy that you'll be eligible to receive, and you'll be able to print those results and save them to validate your claim. Currently, you can only use the calculator for claim periods 1 to 5, but as more periods become available, the calculator will be available to help you and assist for that. And you know, we talked about a number of changes taking place for periods 5 and on, and as I said, the calculator will automatically apply the best subsidy rate for you to qualify for, including the safe harbor and deeming rules based on the information that you entered. If you want to understand the math behind the wage subsidy calculation, we do have a link here for, again, those people who are following along with the PowerPoint slide deck. Now, the calculator, there are a couple of different options here. There is the online calculator as well as the calculation spreadsheet. For most of our clients, you're going to want to be using the online calculator. They say for anyone with a small number of employees under 20, and you can enter your employee pay on a weekly basis and expect to complete your calculation while you're doing it. The spreadsheet is meant more for larger companies with more employees, and they want to enter the pay on a bi-weekly basis, and they want to save their calculation and come back to it later. And they weren't operating for all or part of January and February 2020, but they can use those months for your baseline revenue. So anyways, I want to now jump into the online calculator for a second and show you how easy this is to use. So the first thing you have to do is select the claim period. Now, for some reason, the link drops you down there, even though you have to select a claim period before you can proceed. And look at this. I guess period 6 just opened up today, because I'm telling you, it wasn't there this morning. But let's go to period 5, and we're going to now scroll down and begin entering some information. So we put the number of employees. I'm going to just say 1 for now. And you would put the eligible employees on leave if that were applicable. So what was the total remuneration paid to these employees during the claim period? And I'm going to say, for the claim period, let's say it's, for easy math, $2,000. The revenue drop for the current period as a percent. Oh, you know what? Something funny happened. This is the online calculator I was expecting to click. So it didn't come up right away for some reason, but you got to click that little button. So let's make our selection here. First of all, we have to tell it whether we're going to compare to the previous months in 2019 or the average of January and February. Most people are probably going to be choosing the previous month, so I'm going to do that. The beauty is it's going to ask us for the preceding month's revenue so that we can calculate the deeming rule as well as the safe harbor rule. So I'm just going to make up some numbers here. I'm going to say in April, let's imagine my revenue was, I don't know, let's go with 15,000. 14,000, just so they're different. 13,000. 12,000. In April of 2020, where obviously we would expect that we're going to have some reductions. So let's say it's 10,000. And I wanted to make sure that this period just was less than 30%. So you can tell you that your current period revenue drop is 16%. Your previous period revenue drop is 15.7. Because the higher these revenues drops is 16.6%. Your base rate is 19.9%. One of the important things to know is you are not allowed to average up other than what these rates are giving you here. So now, once we've entered the baseline information for the revenue drop to ensure that we do qualify for this period, we have to begin entering our employees. So I've only said 1 employee. I can say whether this person is arm's length. I'm going to say that they are not. And I'm going to calculate the average weekly pre-crisis pay, as I'm going to say it was $500. And we'll come back to how you calculate the pre-crisis pay and those changes in just a second. And I'm going to say in week 1, let's just imagine that we haven't changed our salary, which is the case for most of our clients. And it's going to calculate our summary of the calculated amount for each employee. And if we want, we can even add in another employee, and it's going to go through the same process again. So let's say that this is an arm's length, and let's say that their average pre-crisis weekly pay was 5,000. Oh, sorry, it was 1,000, and let's say now it's 800, 800. 800, 800. and it's going to calculate the eligible subsidy amount for that employee as well. And you should have both employees now. You can add more employees as you want. You can review, download, send the data to the form below to continue on with the next steps if you're actually going through the application right now. So that makes, like I said, it makes your life a heck of a lot easier. If you're not ready to do it, you can print the summary, and you can also download it as a CSV for later. It's, I think, relatively straightforward, but I know that it's probably overwhelming for some of you. Hopefully this walkthrough has helped. And the last thing I do want to talk about is sort of the calculating your baseline pay. And that's because that has changed a little bit. It probably won't change for most of our clients. But the one thing is now, originally we had that issue of where it had to be January 1 to March 15th, and we had situations where people had to, do a back pay for January to March to make sure that they qualified, because normally our clients pay themselves annually. They are now allowing you to do a comparison of year over year. So for periods 1 to 3, it could be March 1st to May 31st. For periods 4, it could be March 1st to May 31st or March 1st to June 30th. And basically what you do is you divide by the number of days, and then you multiply by 7 to get the weekly pay. So for most of our clients who are doing annual, again, whether you're doing the January or March, over the March to May of the previous year, or March to June of the previous year, or July 1st to December 31st of the previous year, you're probably still getting the same number for the average weekly rate, okay, because it should work out to be about the same. So the good news is, if you're applying for periods 5 through 9, and you hadn't applied before in the past, we don't need you to go back and do back payroll remittances. However, you do need to do them for the periods in which you're applying, because you cannot qualify for a wage subsidy on a wage that has not been paid. So you'll have to do payroll remittances for all of the periods that you're applying for a wage subsidy. Now, if you're going to apply, there's a couple of steps I want to make sure that you do first. And that is, first of all, confirm that the claim period you're applying for is open. Again, you can do that through that initial link that we had at the very first page. Then you want to confirm that you've completed all the calculations. And lastly, you want to make sure that you've set up direct deposit to make sure that you can get your funds as quickly and easily as possible. Once you're ready to apply, the best place to do that is through your CRA My Business account. So you'll sign into your CRA My Business account and do the emergency wage subsidy application. If you do not have a My Business account already, again, we have included a link here for how you can register for your business. Now, I've flown through a lot of information very quickly, but I do want to open this session up for sort of a Q&A to see if anyone has any specific questions about the process or anything that they need help with. So, anyone have any questions out there? And Jose, if you are monitoring any of the questions in Facebook, if you can maybe post them into here for me, that would be greatly appreciated. Now, I don't see any questions coming through. I'm going to give this about 5 minutes before we close off the session. There's our first question. Now, before I answer that, I would just make one request for those of you who are enjoying this session and enjoying the Facebook group. We are trying to expand our community on Facebook and grow our awareness. One of the big ways that helps a lot is positive Facebook reviews. If you could give us a Facebook review, it would be really greatly appreciated. You can go to www.facebook.com/pg/CPA4IT/reviews, where you can ask your questions. And we've got no reviews yet. Thank you, Jose. keep us posted if they come through. So we've got a couple of questions here. Let me start with the first one. If I do my calculations and then later when meeting with you for taxes, is there an opportunity to adjust those amounts? Yes, there is. So let me see if I can take you. I didn't actually put this in, but you can adjust an application for CEWS as well as pay back CEWS, that Canadian Emergency Wage Subsidy that you received that you later realized you weren't eligible to receive. So I'll maybe try and go back to that. We got another question coming through Facebook. Let me just see what that is. Okay. What happens to the accounts for non-arm's length employees? What happens to the amounts for non-arm's length employees' wages? So non-arm's length employees are, as we know, family members, owners of the business. So you are still eligible. They are still eligible. There is no real change other than in how the baseline is calculated. And so those non-arm's length employees were limited to their baseline revenue, whereas arm's length employees were not, because if you were to hire a brand new employee, they would be eligible for the wage subsidy. But if you were to hire your son and he hadn't been employed before, he wouldn't be eligible for the wage subsidy because he would have no baseline. So I don't know if that answers your question. Hopefully it does. If not, please, again, repost. Again, I'd like to just give you a few last moments. I think those are the only two questions that we've got here so far, which is great. It means one of two things. I've done an amazing job explaining this and everyone understands everything and there's no questions, or, which I'm a little bit afraid of, I didn't explain it all that well and you still got a bunch of questions, but you're afraid to ask them, or you don't even know what questions to ask. So for those people who are in that latter group, I again encourage you to go to our Facebook community, connect with us there in the Self-Employed Support Network, and ask your questions. Darlene says this has been a very helpful session. I'm glad you found it useful. I really do appreciate it. It's still a bit confusing, but you'll count on us when you do your taxes. Most appreciated. Rachel, you've raised your hand, so you want to speak. Let me give you a chance to speak. 1 second here. Okay, Rachel, you can chat now.
Hi, Andrew. No, I just wanted to let you know before we wrap up, Jose was sending a couple of questions from Vitaly Livship, if you want to check that out before we wrap up.
Okay. So another question came through from Vitaly. Thanks for your webinar, very informative. I know that we talked about possibly qualifying with annual payroll previously, and the CRA guidelines around this was unclear. Have there been any updates since our last conversation? Great question, Vitaly. Yes and no. So when we go back up to how the baseline pay is calculated, so this isn't really, again, talking to the fact of annual, but it is giving some more options to compare to previous, which is more in line with them trying to at least get that and understand that. But you could run into an issue again. We're still using the mindset here that it is your annual pay divided by the year. These are the pay periods that they're using, which could increase or decrease the amount that you would qualify for. So we're still using it, or we're still recommending that you use the annual pay thing. There's been nothing that's come out, no more information, other than just this new change for periods that came out with the period changes for period 5 through 9, which is that they've now opened it up to these different pay periods for your baseline. Excellent. Well, thank you everybody for joining us today. And looks like we've got a few extra minutes for you guys to get back and get some lunch before you head back to work. And we got one more question here, which is it possible to share the slide deck? Yes, we will post the slide deck to the community, and I'll also get Rachel to send it out to to any of the people who registered for the session. So again, thank you everyone for joining us today. I hope you have a great Tuesday, and you'll join us for our next sessions. We've got some more sessions coming up. Check our events calendar, see what we've got scheduled. I can tell you we're working on another Thriving Amid COVID session with Jim Harris, Michael Lacey, Kevin D, and a new surprise guest. It's going to be another amazing session. It will, like all of them, pivot a little bit and adapt from the past. And it's a great place if you have questions, you want to reach out and connect with agency owners. It's a great place to get some free advice. Again, I'm glad you enjoyed the session, Darlene. Again, number one thing we could ask for, if you really enjoy these sessions, some positive reviews on Facebook, on Google, on Yelp. These really go a long way in helping a small business. So we'd greatly appreciate your support. So thank you, everybody. And with that, I'm going to call it a wrap. Bye for now, everybody.